Yeah, but tonight we thought we would dive into having a look at what the markets are doing, and yeah, we've got someone lined up to share a little bit of how they've been experiencing things so far. So we're going to hear from Joe pretty soon, which is exciting. And then, yeah, we'll get Michael to have a look at what's happening in the markets right now, and then bring it back to me, and I'll screen share the dynamic edge and run through some of that. And yeah, I mean, guys, some of us have been on it for a while already, and some are just starting to look at it. So we're all in different phases with it. I haven't been doing too much with it for the last few weeks. Yeah, family all had COVID. That worked its way through. So we're all good now. But yeah, good few weeks of not quite being on it and as perky as I should be mentally. So yeah, so this evening, let me think, where am I going to do? Let's go for a screen share first. Let me get this out the way. And I'd rather just show everyone a few things first before we bring Joe on. So let's go to screen share, and let's go to my desktop, and let's do that. So pretty sure, I don't mind, guys, if your volume's on this evening. This is a nice in-house hangout. So welcome to comment on stuff if you can't see something or can see something. I've got my volume up so I can hear you all. But hopefully you can all see my screen. I think I'm sharing it. Am I? The screen. Can you guys? You're welcome to unmute yourself and say something, but hopefully. Yep. Okay, so you can see dynamic edge. You can see, can you see the divergence little box in the corner? And the rules, steps in the process document underneath that. Can you see that as well? Just want to make sure you guys. Perfect. Okay, cool. All right, guys. Well, yeah, so this evening, for those of you that have not got access to Dynamic Edge, or you're just running with DCX, that's completely okay. That's how I started, and plugged in there, dived into all things crypto. Heck, I don't know, hopefully you guys have been tuning into Mike Sotero's new course that he started this week. So in there, just give me a little update of what's happening at the moment. I watched episode 1 yesterday, which was decrypting DeFi, how to unbank yourself, day 1. Took a few cool screenshots of that. I haven't watched day 2 from today yet, but I'm sure that was a goodie. Where was the poster for that? So let me, yeah, for those of you, I know a bunch of us are into crypto and are learning all about that, and some of us are not, which is okay. But here is, yeah, so yesterday was how to unbank yourself. We went into some cool details of what that looks like. Today was cryptos and NFTs, play to earn, utility and tokenomics. So tomorrow is going to be top DeFi ecosystems and insurance. I'm pretty keen to hear about that. And day 4 was how the scalper works, AltFi, and the new lists. And those lists are going to be gold. That's going to be all of his latest top DeFi projects to either yield farm, stake with, etc. So that's going to be really fun. So that's a little bit of what I've noticed is happening over there in DCX this week. But if you're new, guys, if you're brand new and you're starting and it's your first week, especially if you're in DCX, then you're going to be primarily plugging into Corinne to begin with, and who is down here. With some of the guys in the chat, I think Joe actually noticed it was, yeah, just her on her Instagram referencing the Luna stuff that she's been sharing about recently. But under her favorites, DCX Fast Start there, and then there's a whole lot of other helpful videos that really go into all sorts, guys. There's something, emotional cycle, Bitcoin halving, supply and demand, and a little astrology. So she obviously goes into it in some of her sessions. After that, if you've worked through some of Corinne's stuff, guys, in your DCX, the floor is yours, really, as to whatever you would like to dive into. So Anas up here, he teaches the harmonic scanner, which is one of the tools you have access to in Dynamic Edge. And then Sean teaches the Swipecoin scalper. And then obviously Mike Sotero and Curtis Cobain both referenced the scalper with AltFi, Crypto Picasso, also the scalper. And I believe he was doing, I saw something here the other day about NFTs. I don't know if it's come off his schedule. Maybe I need to refresh this. But and then Nick Gomez down the bottom, Metaverse, NFTs, Crypto 101. So that's on the crypto side of things. And jumping back, having a look at the Forex side of things, which we're focusing on this evening a bit, will be James Leone's Dynamic Edge. So rolling down, guys, 1, 2, 3, 4, 5. We've got James, who is live. Sorry, let me check that again. I want to double check if his times have changed. I don't think they have, but he's live on Wednesday. So there we go. He's going to be on at 5 a.m. tomorrow, New Zealand time, and then 9 p.m. on Thursday night, and again 5 a.m. on Friday morning. So his live sessions are there. All the recent ones you can access if you missed them to catch up on. We'll just be sitting here. But under favorites, this is where you're going to start, guys. If you're brand new, and well, if you're brand new, you're actually going to go and start in the Academy side of things with the pre-recorded videos for the FRX Academy, which if you guys want, I can show you exactly where that is very quickly. So if we log in here, and go here, and here, and here, and get us in here. And then you're going to hit I am center, which is, sorry, I clicked that very fast, but that was the top button just underneath the home, loads the I am center. And by now, most of you guys might know this, but if you are new, then yeah, inside here, guys, is all these links. So there's a link to GoLive that I was just showing you, all the videos, links to the scanners I'm going to go to now after this, but academies in there, this is where all the base curriculum is. So if you're in DCX, you're most likely going to start with currency exchange, which is all the different exchanges, the actual buying, selling, swapping of crypto, DCX leverage, how to trade on leverage with crypto, and all those videos come from the FRX pack up here, which I can show you now as well. This is where all the original videos are to just bring up to speed. What is Forex, history of Forex, what's trading in Forex, all the way through 100, 200, 300, 400 series, 62 videos in total. The bulk of the watch time is in the 400 series. So if you've only watched, I believe, to do dynamic edge, guys, 100 and 200 seems to be enough for most. But if you want to get some bigger picture of what's happening, go on to, you know, the 300 series. The 400 series have got a brilliant bunch of harmonic patterns and Elliott wave. And so just, you know, that big picture stuff, a lot of stuff that Michael's been sharing with us as well. So that's in there. Jumping out of that and getting back to GoLive. So here's James's favorites, guys. So the first thing you're going to do, these are just some early walkthroughs that he did when he was brand new, so you can almost ignore those. And then you've got the bootcamp video here, 27 minutes. I can't count how many times, probably 4 or 5, maybe even 6 times that I watched that just in the beginning, and just as a good refresh. If I've been out of it for a month, I just go back there sometimes and just put it on the background just to get, you know, the main essentials of his strategy in my head. So I did that a lot in the beginning, and that's what I suggest most people start with. So you can choose. You could go straight into those Forex 100, 200 series videos. One might, because going straight to this video might look like spaghetti if it's all brand new, but one of my recommendations would actually be to watch that bootcamp video as soon as you can. And then you're just going to be aware of a few of the things. He's going to talk about EMAs. He's going to talk about candles, excuse me, the MACD and etc. And then when you're watching those Forex 101 videos, some of that stuff in there is going to mean more to you than others. So bootcamp video there, then you basically have these other videos which break down the key aspects of a strategy. So a couple of these are new. So this multiple time frame analysis is new. Extra tech tools is new. I actually haven't watched that one. I missed that one. That was from a week ago by the looks of it. And then we've got down here, guys, the divergence lesson. So it gets into how to spot divergence, because that's a key part in the strategy. Masterclass indicators, that's where he's going to go through all of the different indicators on his strategy, the EMAs, the Bollinger Bands, etc. And then the balance score chart up here is brilliant. That's where he basically gives us the how to count the 1 to 6 to decide whether this trade's a 4 out of 6, 5 out of 6, or 6 out of 6 trade. And he equates it to counting cards, which is kind of cool analogy and makes it memorable. So that's where James's content is, guys, if you want to watch. And give it a test. If you're on DCX, go and give it a test and see if you can access his GoLive before jumping onto the Forex side of things. And you might actually be able to, some guys have been able to, I don't know how, but anyway, you test it out and go watch him and see what's up. But then scanner wise, his scanner, to find it, I'm going to go from scratch. So if you were, sorry, let's load that again from the beginning so you can all get the right click ways through. So from I am center, you're going to click down here. It says strategies. That's going to load this page. I've just got shortcuts open so I can get around to stuff pretty quick. I'm going to exit that and I'm going to roll down. And then down here, you've got all these options of all the different strategies that are included in either a Elite Pack or FRX Pro Pack. But in there, I'm going to hit pivots over there. That's going to load down here. And when I load that, it's going to load the pivots window for me. At this point, I can delete that and get back here. So when pivots loads, guys, you're going to see the base of pivot, the base pivot strategy. We want dynamic edge. So we're going to go and hit this button, the little graph button next to the US flag, drop down menu on the right here. We're going to hit strategy number 1, and we're going to go right down to dynamic edge. That'll be grayed out if you haven't upgraded it on your pack. So if you get a pro pack, it won't include it automatically. It's $10 more. So when you ask support to give it to you, it'll be selected. And then, and to do that, just in case you guys are stuck at any point, inside of your main page here, guys, is where you can adjust things. And I believe, where will it be? I haven't had to mess around with this for a long time. It's going to be under potentially personal info, I think. It might show, no, not that one. There, down the bottom, you're going to see what pack you have, and then you can either select FRX Elite or DCX. And then from that place, you can upgrade and adjust. I think, sorry, that's not the right place. It might be shopping cart, might be the place to go. If you want to add on pivots or a pro pack, because that pack, that's just the main base pack. Here we go. So you can change things here. So there's the pro pack option. So here's an idea, guys. If you are on DCX, you could add on a pro pack, and that gives you access to the scanners and you don't have to swap over. If I were starting from scratch, I started in DCX, went into all things crypto, and to really immerse myself in that space, because that's what I want to learn about. But if starting again, guys, I would start on Forex potentially and go through all of the 62 videos in there, learn all the base foundations of Forex trading, which are inside of DCX, but with a little bit extra. I'd go through all those videos, and then I would either add the Pro Pack, or there used to be a way to add pivots on its own, because now you can see here, the Pro Pack comes with Gold Cup, US 30, Steady, Bounce Back, DeLorean's amazing, levels, and pivots, and then a few other ones there. So to get pivots on its own, some guys have had success with support, some haven't. There's pivots there, so you could go and tick pivots add-on. That's just a dynamic edge add-on. I'm not sure if it's possible. You guys can go mess around with this and go see inside of the shopping cart and see if you can add on pivots and dynamic edge on its own. Then you don't need a pro pack. I still highly recommend some of those things in the pro pack, like DeLorean's phenomenal, but I don't want you guys to get distracted. But having access to those, listening to someone like Patrick Kenny, he's an incredible market analyzer, and he's under DeLorean. So that's where you go to add on those things. And so tonight, bouncing back to the pivots thing, we've already got, so once you've clicked here and you've loaded the dynamic edge on the side, you're going to click through these options here to find whatever pair you want to look at. For us, mostly with James, it's US Tech 100, which is the NAS 100. And so that is the NAS right now. It's going to load a 1 minute chart to begin with. And so for me, I like to have the 1 and the 3. And I've got another one there, which heck, might as well make that the 5 if it's all going to stay loaded for us. But just to get a bigger perspective of what's going on, guys. And when I start, I'll also actually firstly come in here and look at my bigger charts, which I've just loaded this level now recently. This is a new one. My other one is in here. It's going to be real messy, but it's got all sorts on it, just different levels and things. I'll start here. Part of my trading is just come in, have a look, start from the top, work my way down. I've got fib levels that have been on here for ages and all sorts of different boxes from different moments of trading. Zoom down, see what's happening on the 4 hour, have a look at the MACD. We can see that, yeah, we've got some divergence there already. 1 hour, so on and so forth, work my way down, see what levels are getting tested. And I keep this on the 15 minute for myself. And I monitor that pretty closely with the EMAs that are pretty standard on here, while then flicking over to the dynamic edge. So that's part of my strategy. I might have them spaced out across my 2 screens, but yeah, that's what's going on there for me right now. It looks like we've got a whole lot of noise here and a bit of range and a whole lot of signals popping off. But to quote James, when in doubt, stay out. So range, think range of danger. Because range, if you're taking this bar, you're getting stopped, and that sell and you're getting stopped. It's just, you got to wait for all the stars to line up, guys. So we'll get into that in a minute. But for now, since we're ticking along, I thought it'd be great to, yeah, some of us are brand new and some of us have been going for a couple of months. And I know Joe's been going for a couple of months now as well. And so I thought it'd be really cool just to get him to share some of his experience so far with the dynamic edge. Yeah, because he's been having some success with it, and we'd love you to just hear from more guys in the team what our journey's been like. And also part of this week, it's in-house for us to trade, but I'm hoping also for next week and beyond to have a few nights like this where we can actually invite some friends in and they can see exactly what we're doing, exactly how we're trading and making money. And yeah, just it makes it so much easier for those of you that don't have 2 and 3 yet, or you haven't hit any ranks. That's completely fine. I mean, if you're okay with paying the subscription, you don't want to talk to anyone about it, that is totally fine, guys. There's zero pressure if you do that. But if you would like to have it for free, it's possible. And it's pretty easy to invite a couple of friends to see what we're doing, and they can decide if they want it or not. But yeah, so Joe, if you are, let me just get this set up. I'm still screen sharing. So I'm going to unshare my screen, stop sharing. And then this is going to be a whole lot of my face probably. So there he is. All right, Joe, I can see you there. How am I going to do this? I'm going to make you the host, and then you can just pass it back to me when you're done. But then you'll be able to have the main screen and share for a few minutes, and then we'll go from there. So let's see if that's working. If I've got the view selected on speaker, it should highlight you. tell you what, guys, I'm going to mute myself and anyone else, so then it'll make sure that recording wise, then yeah, Joe's got the front screen. But yeah, Joe, go for it, man. Share a little bit of your journey in here and where you started, how you've been going, how you've been tracking, and maybe even some little lessons you've learnt and where you're at now and how you're feeling about what's up ahead.
Sweet. First off, can you hear me all right? Sweet, cool. Thanks for the intro, Ty. Hi, everyone. Yeah, I'm Joe. So yeah, I got introduced to the IM platform and Ty and all the rest of the crew a few months ago when my friend and colleague Adam, who may be on this call, I'm not sure, he sort of gave me a heads up about this platform and crypto and investing, and it's been something that I've been hidden, you know, toying with the idea with for a while, but just sort of lacked the impetus to get into it. So it was good to have Adam, you know, give me some heads up and introduce me to some of the trading guys and learn about this platform. And yeah, I think the thing that really like gave me the nudge was just talking to people like Ty and other guys who were just really patient and explaining everything to me, and also the fact having this community with this chat group and stuff to learn from all you guys has been really, really awesome for me. So yeah, I just want to encourage any of the newer people and who might be listening in now, like, yeah, get stuck in and learn all the good stuff, and don't be afraid to ask questions. Yeah, loads and loads of good wisdom coming out of these more experienced guys, and I certainly wouldn't have had the courage, I think, to step out and do something like getting into trading and learning this new skill. But definitely with what's happened with COVID, with the last you know, the last 2 years when everything's just become so unstable, yeah, my job got affected, and so something that Mike said last week really struck a chord with me about having more than one stream of income, just so that, you know, if you do lose your job or get put on a leave without pay for a while, then it's not such a huge stress on the family and the finances. So yeah, I see this as an awesome opportunity to get in and you know, diversify income and investing as well for long term for the family. Yeah, that's pretty much what I have to say. Yeah, been learning heaps and starting to see some successes with trading, which has been really encouraging. So oh yeah, that's the other thing I wanted to say as well is don't be afraid to make mistakes. Like, that's what the trading the demo accounts are for. They treat it like real money, but at the same time, you know, learn and then, you know, take notes of when things go wrong so that you can avoid doing them again next time. That's what I've been doing the last few weeks, and I've come away with some good sort of slaps on the wrist, so to speak, but definitely learn valuable lessons from them, which hopefully I won't repeat again in the future. But yeah, that's about all I have on my mind to say now. Back to you, Ty.
Nice one, man. Thanks, Joe. Appreciate that, man. If you can throw the host back at me, maybe let me see if I can do it. I can reclaim it. There we go. Maybe I just did.
Can you reclaim it? Yeah, sweet.
I got it. Cool. There we go. Perfect. Okay. Cool stuff, man. So good having you in the team, bro, and love it. Yeah, just hearing about the progress you've made and the dedication, the way you've plugged in and just learned, stuck to the rules, and like I said, messed around a little bit too. Like that's how we do it. Push the buttons, figure out what happens on demo. You know, it's the easiest way to figure out what a lot size is most of the time, is to push a button and see how many pips go this way and that way. And yeah,
absolutely, yeah.
Experiment and not be afraid to. I mean, rather blow a demo account by figuring out exactly what to do and not to do, on the real stuff. So yeah, it's key to get the evening moving, guys. I'm watching the scanner next to me, watching signals go off and things, and yeah, some of you might be doing that in the background already, but thought it'd be cool to get Michael to share a few minutes of what he's seeing at the moment, and then from there bring up the scanner again, and yeah, just get his commentary on things. I think it'd be awesome. And for those of you who are trading, I've got MT4 open next to me. Whether or not I place any trades this evening, probably not. I'll watch and rather I want to give some attention to what's happening, and just serve you guys this evening. But yeah, we'll see what's going on. Looks like it is moving potentially up. So Mike, where are you? Let me see. There we go. I will throw the host to you, and then you can screen share and chat from your end. So have you got that? Are you there?
Yep, I got it.
There we go. Cool. There we go, guys. All right. Drop some love in the chat for Michael. And oh, there we go. Screen share. We're on.
All right. Hey guys, good to see you again. So man, there's a lot going on right now. We've got massive news to come out in about 20 seconds. I'm just watching that. So Ty, I'll let you watch the scanner with the dynamic edge, and if you see any trades coming up, just let me know, and we can maybe jump the screen over, and you can show the guys what you're looking at. Is that okay? And then maybe we can just see exactly what it looks like to jump into a trade and what the trade signal looks like. So just let me know if you see a trade, and we'll jump in.
I'm watching. One signal went off like 2 minutes ago, and it looks like a few of the things were in the right way for it. But yeah, we'll just keep watching. There's if you guys have got it open, then you can see there. I mean, obviously, I can see those green bars. I'll bring up the scanner again. But go for it, man. You share, and we'll see where it goes. Cool.
All right. So what we're going to do is just have a brief look at just a bit of a market overview and see where things are going from a more high level perspective. So this chart here is the crypto total market cap. So this chart reflects the entire crypto market, and obviously when this chart is going up, we can see that crypto is strong. There's a lot of interest, a lot of demand for different cryptocurrencies. When it's going down, then the market is slowly retracing. Peaked out at about $3 trillion, and as you can see, we're right now sitting in this no man's land. Now, this is actually a really, really important zone, because if we break below this trend line, this lower trend line, we could be testing the lower bands of about 1 to 1.2 trillion. Now, the reason why we watch something like this is if the market does break below this yellow line and go down, we probably wouldn't want to be trading crypto long, because if this market goes south, a lot of the other cryptocurrencies tend to move south as well. So what we'd actually do is we would let it go down, and then we would wait for a reversal. So right now, it's definitely time just watch. The reason for that is if we actually move over and look at Bitcoin, Bitcoin was looking incredibly strong. However, it rolled over, and as you can see, we have the same pattern going on there. And what I can actually do is put a parallel channel in here. So this parallel channel is basically, okay, it's pretty simple, self-explanatory. But when we have a downtrend, so for example, if you look at here, price is reversed and it's moving down. Now, when you get this sort of parallel channel in the context of a downtrend, it's a corrective pattern that often ends up continuing lower. Okay, not all the time, but it definitely is not a strong bullish pattern. So what we're looking at now on crypto is, because a lot of the coins follow Bitcoin, if we break below this bottom blue line strongly and hit down like this, we could possibly be going a lot lower, and a lot lower could possibly be something like 30,600 would be the first stop. So we don't know this for sure, but this is definitely because price could just go straight up like this for no rhyme or reason. However, we need to have some sort of structural basis for our trades. And as you can see, price has been well restricted within this, what we call a bear flag. Now, if we go down to the 4-hour chart, it does actually look a little bit more bullish. Now, the reason for that is that firstly, price has hit the bottom of this blue line. And what you can see is that price is slowly moving down, but it's not really making a lot of progress. Okay, it's just slowly heading down. But if we look at the MACD, which is the momentum, you can see that the momentum is slowly getting higher. So that tells us that this previous downswing is possibly ending, and in the near term, we could be heading up higher. So that's sort of a brief understanding of where we are now with crypto. And unfortunately, a lot of the major coins will follow Bitcoin. So it's good to have an awareness of what Bitcoin's doing. But we're also going to look at the stock market. Now, the stock market had, big crash this week, 1,000 points on the Dow. And it is looking super bearish on a monthly chart. Now, the reason why we want to look at high time frames is because it gives context for what the larger players are doing. Now, whatever trade or investment you enter is all predicated upon the higher time frames. A lot of larger traders and banks and financial institutions, they will trade off the daily charts, the weekly charts, and the monthly charts, because often they're holding their positions for a long time. So if we look at the monthly chart, this is the S&P index, we can see that we have a top, and then we have this huge bearish engulfing candle. That's really not a good sign. The other thing that corresponds with this is that interest rates have started to be raised by the Federal Reserve. Now, every time in the past when the Reserve raises interest rates, we have a crash or a recession. So don't be afraid, because it probably won't happen immediately. However, it is likely that the market is to go lower in the medium to long term, possibly in the next year. But right now, we always want to look at key levels in the market. Now, if we just go back, we can see that we had this big drop down in March. And what you can see is that we reversed from this level here. Now, when we get a reversal from a strong level like that, we always mark it, because when price comes back there, it's often a place of real interest for buyers. So sure enough, we came back there and we spiked through it just today. So notice that this candle is not closed yet. And this spike or this wick represents that there are still a lot of buyers at this level. Okay, so what this candle tells us is that price at one stage went down, but there were enough buyers to push it back up. So if we can actually now go down to a 4-hour chart, which is the next time frame down, what we can see is that we have another bullish candle. So this candle, this body is completely engulfing this red body here, which is actually a reversal candle. You can see that the top of the candle, the top of the solid of the candle and the bottom are completely engulfing the small red candle. Okay. Now, if that candle closes like that, that's a sign that we're going to be pushing up from here. And typically the stock market, the indices will move in sync together. And so we might be pushing up in the near term. So on the higher time frame, for example, if we go back to the weekly chart, it's looking pretty bearish. However, in the near term, we might be getting a good bounce. So again, if we move down to a 1-hour time frame, then that actually tells us that we are diverging on our price. So what we do is we take the previous swing low, which is there, and we take the corresponding low in momentum, which is there, and then we can see that the next low in price, well, it's obviously lower, but if we look at the MACD, we can see the next corresponding low is higher. So that's what we call price divergence. Now, what that means is that this possible downtrend that we've seen down here is coming to an end, and we're starting to get a push higher. So in this sort of situation, I would definitely be looking at buying. Now, what a lot of people do is they don't look at all the time frames. They'll only look at one, and they won't get the context of the market. For example, if we go out to the weekly chart again, a lot of people would say well, look, there we go. We've broken the white line. Prices moving down. Let's sell. But you never, ever, 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 ever sell low if you're investing or trading. You always sell high and buy low. So a lot of people made the mistake of selling right here. On the higher time frames, it looks good, but on the lower time frames, it's looking to bounce higher. So there's actually two types of ways that traders move in the market, and both are predicated upon fear. One is the fear of missing out, which is FOMO. The other is the fear of losing. Now, when price breaks this white line and it looks like it's going to go lower, and people are thinking of rising interest rates, they're thinking of everything negative with the market, they're thinking of inflation, the instinct is to sell, because if they don't sell, the market might drop really quickly and they might miss out. But for traders and investors, our number one responsibility is to manage or control our risk. To do that, you never sell low. If you are going to sell, wait for a pullback, wait for price to move higher, then get an edge, then sell, and then price might drop down. So that's what we're looking like on the markets. It looks extremely bearish. Okay, the global market is looking like we're moving into recession, possibly next year. That's just not my opinion. Those are statistics and facts based on a whole range of data. However, it might not happen immediately. So just because it looks like everything's bad, that is no reason to sell immediately. You have to wait for an edge. So when I say an edge is a strategy that you employ to get into a position, whether it's an investment or a trade. You have to have an edge and never trade based upon what you hear immediately. Wait for the edge. So for example, if we just move over to the Euro chart. So this is a chart that I've been posting in the chat recently. We had this huge push down in price last week. The reason for that was that it broke this level, which is 5 years old. This is a 5-year trend line, okay? So all of this data represents 2017 to today. And you'll notice that when we broke this trend line, we collapsed down very, very quickly. So we possibly have a longer way to go. But just because we've broken the trend line, it definitely doesn't mean that we enter short straight away. So for example, it's possible that we have a lot longer to go. So here's a good example. It's highly likely that price will come at least down to here, which is about 1,000 pips, which is a long way. And if we look back at previous data, it did it back here. And it did that drop extremely quickly. Okay, so this is a monthly chart, and in 2 months, we dropped down over 1,000 points. So the same thing could happen here. However, just because we've broken the trend line, that doesn't mean we enter short immediately. We have to have an edge. And so for an edge, we go to the lower time frame. We're either waiting for a pullback. We're either waiting for a Fibonacci retracement like this. Maybe you're trading from the 50%. In that case, you would wait for price to move back. You'd look for a sell, expecting price to move back down again. So I'm expecting that the markets are going to roll over, but not yet. Now, the other thing that we look at is the dollar index. Now, the dollar index is actually the most important aspect of global trading, because the number one commodity in the world, which is oil, is predicated upon the US dollar. It's traded in the US dollar. The euro, the pound, is traded on the US dollar. The stock markets in the States, the largest ones in the world, you need to buy them in US dollars. So if we watch the DXY or the US dollar chart, if you're trading currencies or stocks, that actually tells us what's going to happen. Now, if the dollar is going to strengthen, we'll probably see a big drop in the global stock markets. Now, if we look at this, you can see we've broken the trend line, large move up, which means that the euro and the pound will probably continue dropping. Now, the reason for that is the euro is so if this chart goes up, it means the dollar is strengthening. However, if we go back and look at the euro, notice that this is in the top left-hand corner, this is the euro paired against the US dollar. So if this chart goes up, the euro is strengthening, but if the chart goes down, the euro is weakening and the dollar is strengthening. So it's possible that based on this break here, as you can see back here, when you get these sort of structural breaks, you tend to get a very, very strong move. The dollar is going to strengthen, which means a lot of the currencies will go down and the stock market will go down as well. So that's a little bit of an overview. I'm just going to do a quick recap on the NAS, which I will be looking to buy. Hang on, let me just remove some of these charts here. So the NAS is one of the main indices that the dynamic edge is traded upon. Now, it's quite similar to the chart we previously looked at. You can see that price came down, and in March, it made this low here. Now, notice that that was the same low it made back here in May. So this is a key level. This is a key we want to watch. Last night, price came down and hit that same level. But what happened on the lower time frame? It broke the level, but it hasn't broken through it with conviction yet. So it's possible that we get a bounce from here. So as you can see, we still have a small wick on that line. If we go down to a 4-hour chart, again, same as the S&P, what we can see is that price is slightly lower, but the momentum is higher. Okay, the momentum high. So this low in price corresponds to this low in the momentum indicator, which is MACD. This low in price corresponds to a higher low in the MACD, which indicates we're probably having a trend reversal. So what that could possibly mean is that we might be going down, but we might be having a nice push up in the next couple of days. So the 4-hour is looking very, very bullish. Let's get into the 1 hour. And what we're looking at is we have a possible trend line break here. Price breaks above that trend line, then we're probably heading back to the highs up here. Now from where we are now, how many pips is that? If we break that trend line, that could be just over 1,000 pips, 1,100 pips. So that's what I'm seeing. I'm seeing that we have to be aware of the crypto market cap chart. I'll just quickly go over that again. We break this lower yellow band, we might be going a lot lower. If we break the higher yellow band, then we're definitely moving up in the near term. Looking at Bitcoin again, we're right at that lower end of the band. It is a place to buy, but if you're buying here, you want to have your stops just under this low, very, very tight, because if we break below this bottom blue line with conviction, we could be hitting a lot lower. And if we look at the stock market, what we're seeing is we broke the line that is represented here, but notice the large spike. Okay, so this huge wick tells us that we're possibly moving higher from here, and the NAS seems to confirm that. And again, the 4-hour chart seems to confirm that as well. So that's a brief overview of what's happening. Ty, I'll give it back to you. I'm guessing that we've probably got a signal, or we've had a signal, but you can take us from here.
Cool. Thanks, Mike, man. So appreciate that. That was an amazing dose of weekly news right there to have a look at. Just you break down all those charts, really cool stuff. Let me see. I can reclaim host. Let's see what's happening now. You're still on screen share. Let's stop participant sharing, bring it back here. Cool, guys. Well, I'm going to screen share because I can see we did get a signal just before you started talking, and which is all right. I'm sure there's going to be plenty of things happening, and no FOMO. We will watch and wait. But let's see. Let me get my screen share back on here, and I want to share that one and go there. Cool. So make this bigger. Actually, let's do this. Let's drag this one out of here. Put this one over there. Get rid of that. So just make sure we can see everything. Put this to the side. So there we go. Through. That's a 30. Right, guys. So for me, yeah, looking at the NAS primarily on the dynamic edge, that's the indice that James Leone favors the most. And then I think the euro dollar is one of his other favorite ones. But yeah, when the one's moving, the other ones might not be, and vice versa. So something to be aware of there. But just some, for those of you brand new guys, I mean, the steps in the process is everything. So with the dynamic edge, if you guys are brand new this evening, all of this is in James's videos, his favorite videos. But to give you a very quick little flyover of what we're looking at right now, essentially the way dynamic edge works is we're looking firstly for divergence. There's three things: divergence, rejection of a line, and a signal. And so the very first thing we're going to come in here and look for, like I haven't been looking to spot what happened, but let's see. And guys, for those of you who've been doing this as well recently, if you see something, by all means, spot it. Like, let me know what's going on. If you feel like, oh, there was divergence there, or there was something there. So for me, let's have a look. So it's, James always says things like as at now. So he doesn't often look too far back. But if I was to look at a different time frame, for instance, I've got the 1 minute over here in the middle, the little one, and over here I've got a 3 on this side. I just need to make that MACD a little bit bigger, but to see what was going on before this last signal happened. And so that signal for us here popped off at 7:53, and over here on the 3 minute we had one at 7:57. So you can see obviously the 3 minute, it's the same rules apply for the signal to pop off. So what causes the signal to pop off, guys, is when the candle breaks and closes on the other side of this black line, which is the center of the road, is how James describes it. I believe it's pretty much smack in the middle of the Bollinger Bands. And then when another candle opens on the other side of it, that's when we usually get that signal popping off. And so it happened at 7:57 on the 3, but obviously a bit earlier on the 1. So 4 minutes earlier, we had a signal on the 1 minute. And obviously getting a signal on the 3 and just greater, you know, here we've got a hopper. So coming back to the steps in the process, I'm getting ahead of myself. So number 1, we're looking for divergence. So I'm looking, but let's see, higher lows, look, I haven't, without getting too into whatever I'm seeing yet, let's have a look. We've got higher lows. I don't know if these are lower or not here. They're looking like they're very close, but I was to drag this out, guys. This is out. Yeah. So one opportunity that you could see here amongst all this range in the middle was that we had higher lows there, and we had some very subtle with the histogram lower lows happening there. So one opportunity that you would have on a higher time frame, that might look a little bit more obvious, but yeah, like over here on the left hand side, it stands out a whole lot more, right? So you've got lower lows over here and higher lows over here. So we're ramping up over there. Obviously this big spike that happened at 7, but then we were just over here. So already from this point onwards, guys, we were looking for a move up, and sure enough, we came up. The MACD down here, these EMAs came up, got close, didn't quite break through, but then over there at 54, looks like, yes, 7:51, 7:54, we started to break through on the 3 minute. And so divergence is the first thing we're looking for, really, which to give us that indication of something's about to change. So like Michael's been saying, it's like, you know, prices going up on the top and momentum might be looking like it's going down. So we've got over here on the right-hand side of my screen, you might be able to see it. These are just part of James's divergence things that he references. I believe there's somewhere around 16 different types of divergence, but these are the 4 that he's consistently referencing, or 8, no, yeah, 4 over here, sorry. So what we just looked at was higher lows over lower lows. So there we go. So which would be classed as hidden. So over here, we've got higher lows down here because those lows are higher than those lows. And on the MACD down below, we've got lows that are lower than those lows. So higher lows on top, lower lows on the bottom, indicating for a move up. So sure enough, at that point in time, as soon as this printed lower than that, that was an opportunity to pay attention. And obviously things started to reverse up here. We had a dot flip. That's one of the things in the process. But firstly, divergence, guys. So you get really familiar with this. I would print this out, put it in front of your face, and get it into your mind. Otherwise, for me, I've had it on a screen, and after a while, it's just in your head and you just start to see it. But divergence, step number 1. So looking for divergence, and also ABC, always be checking for divergence, because as soon as you spot divergence against you, indicating in this case a move down, you'd be looking to lock in your profits or exit the trade. And sure enough, I can already see there was a reason to do that, because with this trade, we'll dive into this trade in a bit more detail. But right there, you've got already higher highs on the top and lower highs on the bottom. So at this point, as soon as we started to get opaque over there, straight that red bar right there, when that red bar concluded, that would have already been an opportunity to get out. And sure enough, you can see price didn't get too much higher. Sorry, this is highlighting that. Price didn't really get much higher than the height of that candle again. And then we had a dot flip, and by then you need to be out, and that's down there. But that right there would be always be checking. You look, once you're in a trade, you're looking for divergence in your face to indicate that things are going to go the other way. So divergence, step one. Then step two in the process, rejection of a line. So that's when price comes through. So we've got lots of lines here, guys. So we've got the black center line, which is one. We've got the pink EMA, we've got the purple EMA, pink being more dynamic than the purple, but which moves faster basically. And then we've also got the yellow and the green, which green turns to red when things change around on different sides of the road. All those are lines that we can see a rejection from. So it's a strong indication if price bounces into that, it's going to either break through it and maybe retest and bounce up, or it's going to smash into it and push back down. And so step two is rejection of a line. It's not 100% necessary. It's just nice to have that confirmation. So for instance, here, looking at this trade or this opportunity, we've got here prices coming up. Well, we've got a dot flip first of all. So as soon as price came up over here and hit, there would have been that PSR dot there, that black dot, there would have been one probably sitting here. And as soon as this candle came up and touched that dot, it reversed and moved that dot down here. So we'll get into steps in the process in a minute, but that would be the first sign to start paying attention. Dot flip, prices across the line. And so rejection of a line coming next would have been prices gone across the road, we're broken to the other side. And then you can see we touched pink, we didn't really reject it, and we didn't push down. We went through it on top of it, didn't get as high as purple, but we did come back down here, and looks like we perfectly tested off pink almost. And then from that point, we had a signal on this candle. So patience, you would have potentially entered as you were crossing the road if you were confident in this move and the divergence, what's going on. Sometimes you can enter a little bit early if you start to see what's happening, but patience always pays, guys. So we came across the line, then this candle opened. We would have had a signal here because this candle opened on the other side of the road. This one came back down, tested pink. As soon as this test happened, this would have been an opportunity from there because this candle closed up here. So this was a test, came down and tested. At this point in time, you would be looking really close for a button to enter. As soon as we rejected that line and pressed up, that was the opportunity to enter. And so from that point of entry, the stop loss on dynamic edge is going to be the PSR dot. So all I did to add this on here, guys, is on the right-hand side here, you can select long, click it on that point on the candle, and then you can drag it down. Oh, so I've lost it now because there's a new trade idea, but that one was on that PSR dot. And with James's strategy, you're looking for 2 to 1 at the minimum. And so I would drag this up and have a look at where 2 to 1 is. So 2 to 1, oh, down there. So ratio of 2, drag it across. So this is what I'll be looking for. So with a stop loss of, let's see what this is, 82 down to 62, we've got 20 pips here between entry and stop. So 20 pip stop, you need to figure out and get really good at knowing what your stop loss and lot size is based on what your trading account is. So if you know off the top of your head, okay, if my stop loss is 20 pips, this is the lot size I can go with. And so from there, based on that being 20, we're looking for 40. And so did we get it? Yeah, perfectly. That signal that popped off the target line, I had a look at it and it was a 1 to 3 target line, but yeah, you would lift your stop and that would be a bonus. Anything above 1 to 2 is a bonus. It does happen, but we don't hit home runs in every single trade. We're looking for 1 to 2. And so right here, guys, we had that divergence that was there. We had it pop over, rejection of a line and a signal. And so now, guys, step number 3, the signal, is we want to gauge the strength of that signal, because just because the signal pops off, as you can tell, you know, looking half an hour before that, this whole range of danger zone, you've got signal, 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 signal. You've just been stopped out and been really frustrated. But looking at that, guys, the Bollinger Bands are all tight. They're not going anywhere. They're not widening out. All the EMAs on top of each other. It's figuring itself out. And so there was no reason to enter over there. Excuse me. But over here, this was a great trade opportunity. So candle came across, retested, like I said, signal. So at that point in time, if you're new to this, you're going to have to get really familiar with these 6 steps in the process. But number one on the process down here, trigger, EMAs and arrows, obviously we've got the signal. The MACD, is it in the correct position? Yes or no? And so you're gonna be, these yeses and nos, like counting cards, you're gonna be saying, yes, we had a signal. Number two, MACD in correct position, is that a yes or no? So a lot of you guys are probably gonna be familiar with this already, but you can see over here, MACD in the correct position and in hopper mode just means that this blue EMA is coming up. Hopper is when James describes this EMA crosses zero, which is the center line. You can see the zero changing around over here, middle of the MACD histogram. So as this MACD crosses there, that's described as hopper mode. And we're still in buy hopper mode when it's on top of zero. But as you can see down here, it's gone into sell mode and it's trying to figure itself out. And so number two, MACD in correct hopper mode, yes. It's right here before the signal, guys. You would have been watching this, seeing this come up. These histograms are still printing. So nothing's guaranteed until these are finished printing. That's what you'll be aware of. So these might turn solid green and opaque while they're printing and adjust. You just by watching the latest one, you're going to see that it's not finished until it's finished painting. But at this point in time, we're in hopper mode. When this bar finished and that bar opened, these are what I call, if you just want to take signals with hoppers, your win rate's going to go up drastically. And so at this point in time, we've already printed this bar on the MACD, and now on this side, the EMA is properly inside of it, and we've got a signal. So this will be classed as buy hopper mode with a signal. So number one, yes. Number two, yes, we're in hopper mode. Number three, price above or below the mid BB. Mid BB is the black band in the middle. Mid Bollinger Band, I think is how he describes it. But right here, yes, we're on the other side of the road. That is one of the most important rules for us, is not entering for a buy on the south side of the road, because that is a strong line you could reject off and push back down. And so that would go straight in your face and get stopped out. And so, yes, point number three, we're on the right side of the road. So that's another yes, that's a three. So point number four, PSAR dots outside. The PSAR dots, guys, if you're new, are these little black dots. And basically all that is for us is, like I said, when this came up, it hit that PSAR dot that would have been sitting there, which caused the dot flip, which is it coming down here. And then we have these dots here, which are basically what we could adjust our stop loss to as this trade is running, to have a type of trailing stop, if you like. And so that question number four is PSAR dot outside. And this is a real key, guys, outside the Bollinger Bands. So these green bands are expanding right here. That's the bands. And so you can see inside of here, when this signal went off, the bands were, the dots were on the inside of the Bollinger Bands, not on the line inside. Down here, I mean, over there, they were outside, but as you can see, we're just still in range. So just because that dot's outside doesn't mean everything's about to happen. The indication of the dot outside means that we could be coming out of range, which was what we were just in. So this whole range zone here, which is just prices going sideways. So right here, dot outside. Is the dot outside the Bollinger Bands? Yes. So number four is a yes. So right now we're 4 out of 6, or 4 out of 4 so far. Point number 5, bands expanding. Were the Bollinger Bands expanding when that signal went off? So at this point in time, the band started expanding down here. So volumes increasing, and over here, they shrunk in a little bit as price went from going down to up. But then right now, price is coming through, crossing the road. As you can see, bands are expanding, 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 expanding. So that's a fat yes for number 5. Point number 6, high time frame. EMAs, that's why you're going to be looking at the 3 and the 5 minute potentially, just having a gaze of what's going on there. So back then at 7:53, and I'm watching what's happening there, but after a big move, guys, it's very usual to go into range. So we might not be going anywhere in a heartbeat right now, because we just had a bit of a move, nothing massive, but a move. And it's just probably coming back down to what almost looks like 50% or 382 retracement. But on the 3 minute, what was going on there? So we had that signal that went off at 19:53. And on the 3 minute, we had what was going on 19:53. So that would have been in between these two candles. So that candle pushing across the road on the 3 minute was when we had our signal. It came up, bumped into purple, came back. Well, it didn't really come back down. But this is a 3 minute, remember? And then it got above these lines. So we did get above the pink and purple, came back down, closed below, came back down, tested yellow. So one of James's sentences that he likes to say is follow the yellow brick road, which is this yellow EMA. And so price did shoot up, came back down, tested the yellow EMA, kept going, tested green, and again kept going. So right here on a 3 minute, you could say that, I mean, I'm not looking into too much detail, see what was going on there, but we were in sell mode on the 3. We're in sell mode because the pink and the purple EMAs were on the north side of the mid Bollinger Bands. And over here at the time, things were crossing over. So we're effectively in buy mode when price is above the pink and the purple. Let me get this right. I've got this note written down properly. I feel like I'm about to quote it wrong, and I don't want to do that for anyone. So inside of my Forex notes, I've got some notes on the dynamic edge, and right at the top, I have got there pink above purple is buy mode. So when this signal went off, pink was below purple. So that would mean that's a strike. So that would mean not a minus, what, a -1 out of 6. So this to me, guys, looked like it was a 5 out of 6 trade, aside from not doing too much analysis in the high time frame, potentially a 4 out of 6. But looking at a 5-minute back there, we had divergence. It's still looking like it's pushed through. But yeah, bands were expanding. Everything was looking great. That signal went off a little bit later on the 5-minute, but again, we've crossed down into hopper mode on the 5-minute chart as well, all just for the confluence that it was moving. Yeah, so bringing it back to some of those points I mentioned before about what's the dynamic edge, you're looking for double, basically. So PSAR dot was your signal, your stop loss, 20 pips between there, so looking for 40. So you could drag this on here, 2 to 1, that's going to take us up to there. So before anything was happening here, you could have entered over here and price ran up quickly, came back down and retested. So if you shoved your stop loss too close, because when we enter, guys, obviously there's a slight difference in discrepancy between our brokers and whatever this price is. And you just got to be aware of that and see how things are moving and get used to, okay, on here, it's a 20 pip stop loss. So I'm just going to apply the same to mine. Wherever I entered, apply 20 pips. And then looking for double, so looking for 40 pips would have been up here. And so price came up, but then pushed back down. And that's probably what we would have seen on another time frame. So that there looks like it was price coming up here on the 3-minute, but then closing beneath that purple. And then price came down, retested yellow. And as you can see on here, guys, price respected yellow, broke through onto green, and then one more test, almost a test. It actually looks like it didn't quite, well, if I put this on auto, it might, no. So we didn't quite retest pink, but then we did rock it up from there. And we got our 40 pips. So they got price drain up. And sure enough, you'd be watching this going, okay, we've got higher highs. We're going up. We're going to be having higher highs, right? So if I'm seeing higher highs, I'm keeping my eyes glued for lower highs on the bottom, because that means price is about to turn around. And so like we said on the right here, higher highs, lower highs, move down. And so that's already drew there. Higher highs over here, lower highs on the bottom. As soon as we hit this candle and this was closing lower, and this red was almost engulfing that other one, pushing back down, could have retested off yellow and gone. But at this point, this is already closed. Like it just, at that point in time, your finger on button, lift your stop loss close, and watch it play out. And you could either get stopped out and just lift your stop really, really close, or at that point, just exit the trade, definitely exiting when the dot flips. That's one of the rules, part of the strategy. So that's the dynamic edge, guys. Let me just check where I am with all you guys in here. I know some guys might have had to bounce. It's 8:31, but I wanted to do a breakdown of that. Things are not going crazy at the moment, but prices start to go down. So what you can do, I'll get rid of that buy right there and just see what's happening. So right now on these different time frames, for instance, guys, what I even like to do, just when I've got time, load a daily and have a look. And you can apply this to Bitcoin or anything. But on the daily chart, what's happening on the NAS right now? So we had a signal on the NAS that shot off for a sell on the 11th of April. That's a while ago. And the target line has been sitting down here at 12,737 since the 11th of April. So what did price do over the last month? Ting, 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 up and down, up and down. I mean, up and down a few hundred pips every other day. But sure enough, price came down and on daily with that target line, and has now coming back up and is testing this one bar that's there. So on a 4-hour, this is what you can do in your spare time, guys. Before you approach the chart, go and have a look at what's going on. So I've just got that one trend line that's there that we need to break through before we really significantly move up. But on a 4-hour, we've got a dot flip. And we've rejected the middle Bollinger Band, closed below, tried again, and now we're bouncing off green. So it wants to get there. It's not quite there. It's almost in hopper mode, but not quite. So 4 hours looking like we've reversed. We've got lower lows, we've got higher lows. MACD's looking like it's moving up. 1 hour, not too much of a dissimilar story, but it's just a little bit more information. Looks like now we're kind of rolling over a little bit for a retest again, but we're looking to break this line. For me, this is a big line on the 4 hour. If we get through this line and we retest and bounce off that, that's going to be a strong signal to me that things are going to head back up. You can look at a 30-minute, 15, you do whatever you like, and to pay attention. Sure enough here, guys, looking on the right-hand side, when that signal went off on the sell, it would have had this target, and sure enough, it hit that target. So it's nice when it does that. I mean, there was 2 back-to-back. Sorry, 1. That other target line was higher on the left, so that didn't make it all the way to target. It did the 1 to 2, but it did not do the target line, which was calculated at 1 to 3. And whenever I see these target lines here, guys, I like to sometimes mess around with fibs and see why, because those target lines are there for a reason. So if you click over here, fib retracement, these generic settings are not my settings. So I will put one on here, top to bottom, and I might, if I'm going to be on here for an hour or two, I'm going to go to settings, and I'm going to adjust this. I am going to always get rid of the background. It drives me crazy. And I'm going to adjust some other things. I like to make this as close to Curtis Cobain's as possible, just because that's what I'm used to. So some of these colors I want to add, you can go like this to add a color or add another line. I want 886 on there, make that red. And I want 786 to be red as well. So right now, and I might just make that a little bit thinner because that's a wee bit thick for what I want to be looking at. And so there's a fib for what happened. So price went up and price came down pretty close to the 50%, came back up, tested that. Let me move it over so you can see, came up and tested. Why does this look backwards to me? 236 is a different color. Tested that line, pushed back down, and looks like we're coming almost down to. So that's not quite on the 786, that target line, but it's, yeah, this might be some other EMA or some other line that's significant for that. But the other thing to add on dynamic edge, guys, is camarillas. So that's what James talks about. It's another version of pivots. It doesn't really work if you try add it on the 1. So if you go to the 3-minute or the 5, and then select indicators, and then type in PIV, you're going to see pivot standards, hit that. Now I would have just added those lines, and you can see those lines are there. Right click on the lines, because right now we've just added standard pivots, which will say R1 or S1. So there's the R1, there's the central pivot line, the P, and there's the S1 down there. That's support 1, resistance 1. That's a whole strategy in itself, being aware of pivot lines. For dynamic edge, we're going to right click on them and hit settings, and then hit under type. We've got traditional currently. We're going to roll down to Camarilla. And so now we've just changed all those lines to Camarilla levels, which is a bit more information, a bit more sensitive. I can now, sometimes they don't show on the 1. Yeah, see, they're not showing on the 1. So if you've got the 3-minute open on one side, Camarillas on that, those are, again, lines that we can reject. And so, yeah, those are really handy to have there. James references them all the time as just another line that we could push off or reject from or bounce from. And so coming in here on the 3-minute, what's been happening? We came in, sure enough, we're testing, we couldn't close above there on that pivot line, which was the what is that line? The R1. So that was resistance 1. And sure enough, we came up, and look at that. We bumped into, what was that, R2? Yep, R2. So we came up, hit R2, which was our liner. So that original target was at, like, I think 44, 144, which we didn't get that high. And I would have been watching this Camarilla line. So if this was here, I would expect a rejection from it. And so price came up, sure enough, tried to break above, pushed its fingers through like fence, like Michael said, and then came and closed below. And so next candle open and rejected off properly. And so Camarilla lines, guys, that's part of the strategy, and that's how you add them. And now I would have that rather on the left-hand side and have just that 3-minute chart open. But that's the 1 minute back there. And right now we've just been missing. Oh, hang on, let's do this. So instead of going from that point, what happens if I go from this point? And see what's up with that. So sure enough, look at that, guys. Where did price come down and test? It looks like it is almost bang on the 61% right there. And I mean, I can tighten this up. I'm not banging on these levels, but if you can see these things ahead of time, and I mean, these lines are pretty thick, so there's a little bit of room for adjustment and things. But when you can see those lines are there, other people can see them too. And so you can be aware of that. I mean, that is very, very, very close. And so sure enough, yeah, we came close, but didn't quite break through that. after this move. And now it looks like we've rejected off the 50% and we're coming down a bit. So that was a little bit of a walkthrough of Dynamic Edge. I know some guys are still with us, but just want to show you that, guys. So this scanner is amazing. It's not hard to learn, and you can use it on Bitcoin on the weekends as well. So I've done that a whole lot. Any trade that I'm looking at, it could be an entry on something on leverage like Polkadot or Chainlink, things like that. XRP, you can come in here and load it in here too, just by clicking up the top and deleting what's there and typing in XRP, and it's going to give you some options. When I get rid of the M1 XRP, and you could load an XRP chart and do whatever you want from there. But let's see who is still here. That's right, cool. Just want to check and see who's still with us and check the chat. Sorry, there's the whole lot of you guys have been talking. I haven't been able to see that. Sorry about that. Let's see. Let me play catch up. Pivots, could you use the critical deciding factor deciding on the ball there? Okay, so sorry guys, just catching up in case there's some questions in here. Okay, so Michael's been answering some stuff. What were those dotted EMAs you had? I think that was Mike's chart. That was his, he just basically added, I think, some of the EMAs to his TradingView chart. Dotted EMAs, you can adjust things on your charts on TradingView, make them custom marks. So you can adjust things to look like whatever you want, really. And Happy's got some incredible charts that I hope you can all see soon. Right, just checking some comments. Any chance you could share your checklist? Yes, that you have. Yes, that's just me screenshotting James Leone's GoLives. So nothing special about it, but I will share it with you guys. I'll drop in our chat after this. And yeah, just wanted to show you how the scanner works, guys. It really is, I believe, one of the easiest strategies to pick up and run with and learn and get profitable with very quickly. So I jumped on this, watched the GoLives, watched the pre-recorded favorites, watched some GoLives, and then I spent a month jumping on. I was crazy. I jumped in with the Canadians. So some guys in our team, Steve Coleman, Chris Leland, they've been a part of the academy for 2.5 years. They've gone through almost every strategy, and this is the one that they've landed on as being the one that works for them and the one that they've been able to help new team members get profitable on the quickest. And so I wasn't going to reinvent the wheel. I believe in locking in a slipstream of success and following, learn that, and then figure out what else I might want to learn after that. So I logged in with them at the time with daylight saving. I was getting up at 3 a.m., 4 days a week for 4 or 5 weeks, and jumping on their Zoom. So they run a Zoom every morning, 6 a.m. Canada time when the New York Open is, and there's a lot of movement with New York. And yeah, just to immerse myself, guys. They had 30 to 40 people on those Zooms in the mornings, and 4 or 5 of them were talking through kind of what I was doing there, but live, like as it's going on. All right, guys, we've got a signal. What's the 3-minute doing? And anybody can chirp in at any point in time and say, guys, watch out, bands are actually contracting, they're not expanding. Okay, that's a check against you. And so I just spent a month immersing myself in it to really learn it and put it into me. And I think now that's about 1 a.m. So you could stay up and join those guys if you want on the odd night. I highly recommend it. Even if it's just, for instance, our Thursday night or Friday night, you could potentially pull off for where we are in the world, rolling over into the weekend, just to experience what it's like with those guys commenting on it. I know some guys like Mark in Australia is able to link in with them. It's a little bit more friendly time for him. And for Jordan in India, just, yeah, for us in New Zealand, the New York Open isn't a great one. But just to experience that culture of those guys leading those Zoom calls. And if you guys are hungry for it, we could potentially do the same here at an hour during the week. So whoever's keen, we could set up maybe a reoccurring Zoom for guys who want to trade and all look at the scanner together, could hop on the Zoom. And yeah, we can figure out if guys are keen to lead it or just be a part of it together and have an open conversation while trading. Some guys trade brilliantly in silence. Some love to have some community and different eyes on it while learning. And yeah, whatever you guys want, let me know. Send me a message if that's something you'd like. And yeah, at the moment, just because I also have work meetings on some nights, I'm not able to trade every night and be on here. But yeah, for those who are, I would love to make that possible. So I've got a paid Zoom account, so I might even be able to create a reoccurring meeting with the same link that you guys just log into, if that's something that you guys are interested in, and trade together. And yeah, looking at this, I'm just checking what's happening right here. That's still in the 15 minutes and bring it back down to the 5. But yeah, guys, feel free to unmute yourselves if you've got any questions or you want to chat about what's going on right now. Some of you may have been trading. I have not, obviously. Just been looking at what's been happening, but we've got a dot flip on the 5 minutes and we're in sell mode down there. So sure enough, the scanner's picking up these look like lower highs, higher highs over there for that move down. So the 5 minute, for instance, would be showing that there being a lower high because he's a high lower than that high. And over here, we've got these highs are all higher than those. So lower highs over here on the right, LH over HH, move down. So sure enough, that was the beginning of our move down on the 5 minute, which you can see was a little bit more obvious on the one. But yeah, guys, fire away. I'm not sorry, I didn't get this chat back in front of me. Group trading would be awesome. Cool. Love it, Joe. My head hurts. No worries, Russell. That's bro, if you haven't seen all this before, that's a lot to take in one hit. So yeah, just it's just assimilating yourself with it, man. Like obviously that looks like spaghetti. There's a lot of EMAs there, but all I did was tune into James, 3 times a week initially, logged in those Zooms and just got it into me. I mean, I don't need that divergence and checklist chart in front of me anymore. It's in my head. So it just happens over time, right? I mean, you could do this once a week and you're going to get what, like, if you did it, 2 hours twice a week, it's 4 hours in a week. You're going to get, my math's not great right now. You're going to get 4 hours a week across a month. You're going to get 16 hours. Or, which is what I did. I decided I want to really bake this in and do this every night, or in my case, it was every morning for a month, just to really lock it into my head. And so I was putting in 2 hours every day. I was doing 8 hours a week, essentially at minimum. So what's that? 16, 32, about 32 hours versus 60. Yeah. So, I mean, is that right? 2, 4, 6, 8 across the mornings, 16. Yeah, something like that. I was putting in a lot of hours across a month just to really get it into me. Honestly, once you cross the 10-hour mark, most of it's going to be in you, especially if you're watching. And this is what I encourage you guys to do as well. If you are watching James and he's commenting on what's going on in the market, it is very tempting to try and trade during his go lives, because is he going to comment? Is he going to confirm? Are we a 6 out of 6? Try to just refrain from making money in the moment when you're learning and when you've got him live. Like, he's there to answer questions on every single go live. So if you've been trading and you follow the signal through and it slams in your face, you can come and say, hey, James, what about the candle and the signal that went off at this time zone? And you might just have to, down the bottom here, adjust to, I believe he's on Dublin time, like +1. So if we did that, you could go to him and say, hey, so this signal that went off over here at 8:53 a.m., like, he will then in the chat comment, or he'll comment back to your question and break it down. And you'll say exactly why that didn't work. And he's a genius, guys. Like, James Leone, to give you context, he's been trading, I believe, since 2000 and, let me get this right, 2004. So almost 18 years of trading, but he's been educating since 2000 and I want to say 14. So maybe 8 years worth of educating. He doesn't seem to lose trades. He follows the rules to the letter. He made a 10 pip loss in January. And before that, I think it may have been October last year. He still hasn't made a loss on the go live I was on a couple of weeks or so ago. He still hasn't made a loss since that 10 pip loss in January. This guy's an animal and he knows what he's doing. So if you follow his strategy to the letter, obviously don't expect to not make any losses in the beginning. That is highly unlikely. But he's very good at telling you and not being greedy. Like, he would follow this to the letter. The signal went off. The target is a pre-calculated thing, that 1 to 3. His strategy is looking for a 1 to 2. And if you get up there, great. Bring that stop loss up. Maybe take half your trade off the table already. Let a little bit run. You can do whatever you want. But authentically speaking, he likes to say TTFM, take the something money, probably. And yeah, just no one goes broke by taking profits, guys. That's the thing. As soon as you're in a trade and it is running, it's very tempting to, for instance, bring that stop loss up very close. But if you are confident in the strategy, keep your stop loss where it should be with those dots, because price reverses. So if you took the signal, for instance, price came up and then reversed, you would have seen on the higher time frame why it reversed, because we were struggling. Even here on the 5 minute, you can see we bumped into pink. On the 3 minute, we would have bumped into, I think it was purple. So sure enough, back there, we're closing below purple. That's why that didn't quite break through. But if you lifted your stop loss up too early on this big fat candle, after every massive green candle, almost always comes something, like he calls that a BFO, a big foreign object, probably something else. But straight after a big candle, guys, there's always going to get a little bit of something else in your face. Look, things can happen and things can keep moving like crazy with news. But for the most part, on average, big candles up are usually followed by a bit of a movement back down, because some people are going to exit really, really quickly and take their profits. So that candle there pushed up, sure enough, came back down. But if you lifted your stop too early, all of these would have stopped you out. But if you're confident and know that's my entry, that's my stop, I'm going to follow this. That right there would have gotten real close, but sure enough, price then pushed back up, and you could have then lifted that stop and locked in at least, 3/4 of that trade and gotten stopped out. James's strategy, he likes to get stopped out rather than close a trade. So he likes to lift that stop, lock in profit in case that thing rockets off. Sometimes that happens. So I've adopted that theory. I sometimes will take half my trade off the table, or maybe even 75, 80% of it, and let that last part run and just lift that stop. And if I'm into a good position and I feel like it's going to run overnight, I might leave my stop just a little bit lower if it's a small portion, because I'm in the market. I've got a little bit of wiggle room. That whatever 10% that's left in my trade, if this thing's going to move 300 pips overnight, like it sometimes does, especially with New York, I'm in. I don't mind occasionally risking a small amount of my position. I've already locked in my gains. I might leave that in there overnight. So it's like scalping your way into a swing. And so I could leave that. Sometimes you just got to give yourself a bit more of a generous stop, because it will come and hunt you out most of the time. And sure enough, that thing could run away, and you might potentially gain, 200 pips overnight on a smaller position, but it happens, and you'll get a feel for what's going on a bit more. So it looks like on those other time frames, like on a 4-hour, that we are reversing and could bounce up from that key level. On the 4-hour, that white line there, it looks like, yeah, we've bounced above it. The 1 hour is going to give us a bit more detail. Yeah, so that green line I've got there, guys, is a trend line from further back up, and sure enough, we broke above, came back and tested it, and also it corresponds to some EMAs. But yeah, looking like we could move up from here. I know some of our guys are really good with Elliott wave, and I try to incorporate that, but I'm nowhere near as well versed on that as just following the strategy. But obviously, if you're looking on here, yeah, higher time frames, you might spot those Elliott waves better than others. For instance, let's have a look and see what we're seeing here. So that for me might be the beginning of a reversal around there. And so that could have been on a 15-minute, our first wave, looking for a potential pullback. I mean, on a 15-minute, we got this target over here. So that would be potentially 1 coming up, pushing back down here for 2. And then from there, we might push up again from there. So all sorts of different layers, guys, that we can apply to what's going on. The cool thing was we did have 2 signals here recently that just went off perfectly and honoring the strategy, not honoring that target line. Like I said, that was higher up here. But this one here, what was going on here? So we had, for this sell, lower highs. Like I said, we had these higher highs and we had these lower highs down here. And so at this point in time, guys, this is 808, 806, 807, 808. When was our signal? The signal for this was 8:19, 11 minutes later. This is exactly what James says on one of his, I think on the bootcamp video. He describes it as watching paint dry. From this point here, we have been ready for a move down, which we've been watching. We've got that divergence. And sure enough, we crossed the road, following the rules. We're waiting because we're still coming down here on the MACD, pushing down, cross the road there on the MACD. So we are right before the signal again, pushing into hopper mode, proper hopper mode of the signal. Great reason to enter that trade, except what the heck happened there? Sorry, my voice. Looks like price came back up and yeah, would have gotten stopped. So if you had a stop loss, oh no, sorry. So if you kept the stop loss where it was supposed to be, you would have pushed down and you would be safe from being stopped out, and you would have been in the red there. If you entered there, you were in the red for a chunk. And let me get this 3-minute loaded up and let's see what that was looking like. So that dot was on the outside on the 3-minute, so that's looking good. That was that's 8:27. That's a bit later. So yeah, 1 minute's obviously going to be our first point of seeing what's going on. But even on the 3-minute, guys, you can see we're coming down, tested off pink, but then there we crossed through So you can wait, guys. This is the thing. If you want to be more conservative, the 1 minute obviously is really accurate. The 3 minutes going to give you a whole nother layer of strength based on the trend. The higher the time frame, the stronger the trend. So you could potentially, like, it's not exactly the rules as such, but you can trade the higher time frame signals if you're more patient and you're okay with waiting and watching and bigger swings and movements, because on the higher time frames, you're just getting bigger moves. So that one went off on the 5, went off on the 3 as well. And we haven't had a buy signal yet to say otherwise. We hit the target and pushed lower, and now we've got a dot flip and we're waiting for a signal for a buy here. But yeah, so for this one, we would have seen we got, oh, I'm trying to see for what would be a reason to not enter this trade right now. So we've got higher, potentially these higher lows, and I just want to see what's going on down low. But that they're pretty level. So I mean, here we've got these lower lows, but that's lower lows, lower lows. So yeah, it was looking like a good option when, especially with that hopper mode that came through over there, and then pushing through, coming back up. And then you just be watching this, guys. Like, we came back up, and sure enough, that would freak some people out, because this will be looking like we're going to buy hopper mode. And we tested the black, rejected off it, pushed back down, and then from there, boom, all the way down. So what did that turn into? Like, that was quite a move. Let's have a look. Short position from, let's say you entered on that candle there, stop loss on there, we would have been looking for 1 to 2. What is this is telling us 2 point something, but 1 to 2 would have been there if we were patient. So right then and there, guys, that did play out. Again, 1 to 2, it did over there, and then price went a little bit lower to that target line, came back up and pressed all the way down to there, which you could have seen this and thought, you know, price could potentially come back and retest these lows, and which it did. So you could have just had a stop moving with it and kept some on the table, because that went as low as, I mean, you probably wouldn't exit right there. You'd probably exit when the next one comes back up. But yeah, potentially a 3.5, 3.5 pips right there. So right now on the 1, let's see, sorry, I haven't got this chat window in front of you guys, so you're busy probably saying things to me, and I don't mind if you unmute yourselves by all means. So cool, there you go, sounds like it works. Great stuff, Russell. Mid BB above EMAs and facing up, question mark. Mark, was that for right now, or when you said that at 8:55? So mid BBs, you can, I don't mind if you guys unmute yourselves, really. We're all here doing this together, so I don't mind if we all even have a little chat and see what's happening, see who's still here. How's it, Etienne? Right, good to see you in there. And Sam and Mum, love it. My mum's in here, this is epic. Her and Dad are all over the strategy. Move that out the way. So right now we have got pink and purple above. Let's have a look at this. So internet connection unstable, hopefully not. What do we got? We got purple above pink. So pink below purple is sell mode. So on the 1 minute, we've got, yeah, we're in sell mode, and as well, they're above the mid BB. So this mid BB is pushed beneath. Obviously, if price is running up, right here, price is running, mid BB is now above. So pink and purple over here are now below as price is going up. And it's going to take a while for those adjustments because they're slower averages. But sure enough, price came up and came back down, and we are now again below the pink and purple. Excuse me. So on this very short time frame right now, we're in sell mode because pink is below purple, and also these EMAs and the MACD are beneath 0. So we're technically in sell mode on the 1 minute, and we still are. We still had that sell signal. Price is trying to get back up there. But on the higher time frames, guys, we could, I mean, yeah, bands are still expanding on the 3. They're closing on the 1. You'll definitely see them be more dynamic on the lower time frame. So here we've crossed the road. So looking at this, we're approaching a hopper mode. We've got higher lows, higher low. Like at this point in time here, that was the point for spotting a reversal. Lower lows, higher lows, right there. That there was divergence for a move up. So at that point there, price sure enough came up, tested. It did. See, this is why we wait for the signal, guys, because look what will happen. You could have, if you were not patient, entered that trade a little early. We crossed the road, right? But sure enough, the close of that candle, boom, right back down your face and stopped you out. And now it's just been flirting with that line, and it's come back down again, looking low. Now we're putting in a higher low that things do want to go up. We're just still things to think about, like what angle is this mid BB on? It is facing down still. It's what is that, like 3 o'clock kind of thing on an angle, whereas the on the 3 minute it's pretty horizontal range. So it means price may not be going anywhere anytime soon, but it's just a little bit flat. On the higher time frame, 5 and maybe the 15, just to get a grasp of what's happening there. We've come back down, tested purple. That's pretty cool, and closed above. And that's why James called the strategy dynamic edge, because he believes that these EMAs, whichever these numbers are, the pink and purple and other ones, are dynamic support and resistance. And so that's where the name comes from, guys. So I mean, yeah, these closing, penetrating but closing above on the 5 is because that is a strong resistance line. And those Camarillas, I need to add to this chart. That would be helpful. PIV, click on there, added. If I zoom out, they should be there, and just make those Camarillas, done, hit auto, put it back where I want it. Yeah, so having a look. So there's no Camarilla around here, but there is right there on that mid BB. So that's probably either our central pivot or the R1. There we go. So that is the R1 right there that we need to get back above. So still looking like it wants to potentially go up, but on these lower time frames, guys, we're still pointing down. I mean, the 15-minute is still pointing down quite properly. Higher time frames though, we're looking very different. On the 1 hour, things are still looking, I think, pretty up. Let's have a look if this is going to load. Just drag this over a bit, see what's going on in the 1 hour. 1 hour, we're facing up. We had a signal from this massive explosion at 7 a.m. Got above the pink, came back down, tested it. The target line is up here, 791, which is, yeah, 700 pips from where we are right now, which is possible on a 1 hour. I mean, honestly, guys, the NAS does move this much overnight. They can go 300 pips one way and 300 pips the other way around a New York Open sometimes. So yeah, having a look at that, we need to break, like I said, this big trend line here, which we've rejected, and now we're coming up potentially reject. If we break through this trend line, which might be like New York Open, I reckon 1 a.m. guys, we're going to get some decisions around here. But yeah, that's where we're pointing up, but we're not quite there yet. And so price, for instance, might come down and test the mid BB on the high time frame, or this R2 down here, which is a good 50 pips down from where we are, 55 pips down from where we are right now. But yeah, that's how I look at the dynamic edge and roll with that. And I know a bunch of you guys are on it and already having some great gains with it. But yeah, guys, by all means, I know if you have not paid much attention to the scanner yet, that can be quite a lot to take in. But just remember, it's just hours, guys. It's a 27-minute bootcamp video, another 5 hours of other footage that he's recorded, and then just being on his GoLives. And when you actually hear him live and you're watching the candles print and he's talking about them, that's where the stuff really sinks in, and we can ask him questions and etc. I've just got a massive note file from all the GoLives I've been on where I've just written down whatever he's talking about with dates and etc. just from my early days. Everything from ABC, always be checking. ABCD, always be checking divergence. There we go. Yeah, just so many things. I wrote down what questions I had for him that then I showed up to a GoLive with questions. Just trying to see everything else that's interesting that I wrote down here from some of the notes. But yeah, let me see if there was something else in the chat there. Oh, thanks, Russell. Appreciate that. Nice. But yeah, guys, just be encouraged that this is very learnable. Like James says, it's like learning to drive. And as long as you follow the rules, you're not going to get pinged. James is pretty brutal. He'll say with dynamic edge, you got 3 options. You can have a small win, 4 options: a small win, a big win, a break even, or a small loss. In his mind, it is completely illegal to have a big loss with a dynamic edge unless you are over leveraging, over risking, or not doing the right things with your stop loss. So if you follow the rules, it's not rocket science. It's just discipline, and it's very tempting sometimes to enter early or to enter and risk too much. For instance, I've done this like on demo accounts and even sometimes on my real account, if I'm honest. Like I would maybe start risking 3% and 4% and 5%. What? Oh, I'm so convinced in this move, I'm going to risk more on this. And I've had some nights when I've made huge gains, and I've also had some nights when I made huge losses. And so I want to encourage you, be very okay with 2%. And in case you guys haven't seen it or you can't remember it, I can drop this in the chat. This compound interest calculator, guys, is the thing that's going to give you all the peace of mind that you need to know of what's possible if you follow the rules. And so starting with $500, 2% a day, or 14% a week, it's the same thing. For 1 year, you follow these rules, $500 turns into that. So the thing is, that looks great, but down here is what it looks like month to month. So if you're starting with $500, your first month, if you're doing it every day, for instance, 14% a week, whatever that works out to, you know, you've only made, what is that? Like you've made $370, which is great, but then it doesn't sound life-changing when you think about what that is per trade, when you're risking 2% on 500. Like if you're really following the rules, 5% is going to be like 10, $20, 0.02, $10. Is that right? 1, 5, yeah, 10. So $10, guys, is what you'd be risking on a trade on an account of $500. If you're risking 10, the goal is to make 10. So if you are only making $10 a session initially, for some of you that might not feel significant, for some of us that's going to be significant. You're winning. Just be content that if you are making 2%, even 1% a session, guys, we know where this goes. But if you start risking more and you start losing more and your account starts going backwards, say your 500 suddenly turns into 400 or 300, now to get back to 500, to get back to where you were, you've now got to potentially double your account to get back to where you were. So it's just not worth going backwards. Don't over leverage, don't over risk. Be okay with those smaller gains. It's just not worth it. And get comfortable on demo, because once you learn the skill, it is extremely possible to go places with it. So yeah, I'm trying to think if I have any other things I can share with you. There's a couple of videos that James has done on the side on the odd Zoom, where he talks about there's something called the gate system, where it's his money management thing, which he's not allowed to talk about on GoLive because we're just not allowed to do financial advice, officially speaking. And so he's got a spreadsheet in there where he shows one way how he's helped somebody make, thanks, Mom, welcome, how you're able to basically start with 500 and go all the way down to 70K, following a strategy of making 32 pip wins over and over and over again. And if you make a loss, you half what you're risking every time you make a loss. And so you could make 6 losses in a row and not go back an entire gate. He was an accountant. He figured this out really well. So if you want, I can share that video with you guys. It's going for the gates is not where you start. You can get there. Like it's when I was trading with the Canadians, that's a bunch of the guys were starting to do it and working their way through the gates. And I wasn't confident enough at the time, and I've had too much time off right now. But that's my goal, is to get back to that point where I'm consistently going after 32 pips a day and being content with that, and just making those percentages. And then from there, guys, just be consistent. That's the thing. Like if you do take weeks off, like I have recently, it can be hard to show up one night and just go for it. And for me, most of the time I'll show up. If I've been off it, I will show up and do demo, because I just don't like going backwards. I've done it enough in the midst of it. I've learned my lessons, and it is just not worth going backwards. So right now, this just keeps moving, right? So on the 5 minute, we've got this target that's lower down. We need to break through there. We need another 10 pips for this thing to fall lower. But yeah. The 3 minute, you'll notice, has more extreme targets for some reason. I don't know why. Not right now, but it usually does. So that's giving us another 50 odd pips down potentially. But sure enough, if price did come down, guys, I'll be watching this Camarilla like a hawk, finger on the button, or moving my stop loss. But as you can see, price is still going down, which is yeah, pretty cool if you were in the trade. I wasn't. So we got a dot flip on the 15, which is pretty big. So again, I suppose we had a dot flip and now it's come back to the top side, but yeah, there you go. So that purple, that would potentially be another place to stop if we're breaking through pink. Yeah, I know I'm just rambling a whole lot, just talking through the strategy, guys. And I know some guys have moved on to probably trading their own strategy or doing whatever, but yeah, Sweet. Idiot will share. I've got that YouTube link and potentially the actual document of the gate strategy. Do I have it right here on my desktop? I've got a whole lot of, let's see, gates. This is what it looks like, just to get you guys excited. So that right there, there's a spreadsheet. I can find the actual spreadsheet, but you can see starting with, I believe, $500 or $600, you're risking, these are your lot sizes and etc. So you're risking 15%. So no, is it? Maybe? No, 15 pips to win 32. So that 1 to 2, just beyond 1 to 2 is the goal of this. So yeah, 0.05 is the stake. So if you're winning there, you're winning $16. Then you're winning 32. Then you're winning 64, 96. So these first 10 gates are everything, because you're like doubling your risk almost every time. 1, 2, 3, 5, 10, 12, to the point where you're up to now 100, and that stays the same. So you get through those first 10 gates, you are now winning 3,200 a trade at K10 and potentially making a loss of 50. So if you make a loss, you'd be going back and you can follow the spreadsheet. But yeah, from there, it just repeats itself for 20 gates and it's just 3,200 the whole way down. So that's the goal for me, is to get to this gate system confidently and work my way through. But I haven't got there yet because I've just been out of it for a while. But I can share it, and there's a video where he breaks this down, and I will find that for you guys because it is pretty epic. And he can't talk about it on GoLive, but thankfully he did it with the rest of our team. So yeah, guys, that is probably more than enough for me for this evening. Just wanted to hang with you guys and break down the dynamic edge and show you what it looks like and how it functions. And